Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. I like saying that now all of a sudden. I don't know why, but I do. I've been saying Wealth Press for so long, I guess now I'll have to get used to saying the Trading Pub. Anyway, it's September 14th. It's 2023. It's about 7:52 in the morning. The market's not going to gear up to open for another, let's see here, hour and 38 minutes. So we got plenty of time. As you can see here, the Nasdaq is up about 50 points. The Dow is up about 90 points. I would say at the fringe of randomness, but still fairly random. Nothing really to get too excited about. The bond market. Now, I'm very, very curious about the bond market. We had the CPI report yesterday, and the CPI came out. Let me just show you. It was really a nothing burger. What happened? What I was fearful of that that if you take food and energy, which really did gain quite a bit. And if you put it in with the cumulative, it was worse than expected. They were expecting 3.6, they got 3.7. But again, very little. What's good is what the Fed is looking at, and that's the core, it was right on target, which is good, which means without food and energy, which have been going higher, quite a bit higher, as you can see right here, things are getting better. But, as expected, nothing really crazy. Well, today you've got the PPI report and retail sales. PPI, we're looking at ex-food and energy at 2.3. That's going to come out in about, 36 minutes. 2.3. I'm hoping the number is weaker. Now, again, look at with food and energy. They're looking at 1.3. So if this comes out like this without any kind of wrinkles, if it just comes out just like this, I don't foresee any major movement in the stock market as a result. And you could see right here, the bond market, I mean, look at this. The PPI, CPI, PPI, they should impact the bond market. Look at this thing. I mean, look at this. And remember something, the stock market gets its volatility from the bond market. The global economy is what drives stocks. So if you're not getting any kind of volatility in the stock market, it would explain why you're seeing very low volatility in the SPY. You see that? Now, the bond is not going to necessarily tell you exactly minute by minute what the stock market's going to do, but it reflects on its volatility. There's very little volatility right now. Very, very little volatility. When volatility is lower, that means income on credit spreads. It's lower, which means we have to go closer in the money. I'll be talking about that today, by the way, at 1 p.m. I'm doing a class called Weekly Cash Flow. It's happening at 1 p.m. And there's a link below this video. You definitely want to check it out. Let's continue. So keep your eye on the S&P, the 50-day moving average, whether we're going to break higher or we're going to stay here. Here's what I believe. If the number is okay, or actually a little better than this, although I don't think it will be, but if it's okay or a little better than this, I'm expecting volatility to start pumping into the bond market, which would in fact go into the stock market and cause a little more volatility here as well. We need some volatility. I mean, this is like watching paint dry. Literally, this is like watching paint dry. It's very hard to swing trade in a market like this. Day trading is okay, but swing trading is very, very hard. And we need to see whether we're going to break above or below the 50-day moving average. And right now, it can go either way because, look, the Dow, it's below the 50-day moving average. The QQQ is above the 50-day moving average. And the SPY is just a hair above. So it's a very, very interesting situation. And I'm hoping that the PPI could be a deal breaker. And also we have retail sales today as well. Retail sales will be important because economy is 2/3 retail sales. We want to see X vehicles. We want to see retail sale number. If retail sale goes a little higher, it'll show that the economy is actually doing okay. If retail sales are numbers are worse, and if producers price index is higher, well, you understand. But again, you have the whole bad news, good news. Don't get me started. Energy is still the leading sector. It is the sector that's giving us the most upside right now, even though, let's see, you know what? Let's take a quick look here. Instead of guessing, why not take a quick look here? Let's look at the short-term scan. Let's look at the 3-week. Energy, consumer discretionary. But if you look at consumer discretionary, you will see that consumer discretionary is also right here, but consumer discretionary is at a very interesting resistance level right here. Let me just, oops. Here we go. Very interesting resistance level. And if it can bypass this, it can go higher. It's got like an extended V V-shaped reversal here, but it could go higher. But energies are already there. Energies don't have to go higher. They're already there. So there's definitely, without a question of a doubt, more accumulation coming into the energies market. It doesn't really matter what we think. It's just what it is. So we definitely want to focus on the energy sector. Also, you've got earnings on Lenner, which is between the 200-day and the 50-day moving average and below the 100-day. And you've got earnings on Adobe, which is making swing highs. So Adobe can have an impact on today's gains as well, because Adobe is a fairly large technology, software, consumer discretionary. You need Adobe for consumer discretionary because Adobe's used to make graphics for movies and all those other cool artsy-fartsy things. Yes, I said artsy-fartsy. Now let's look at the S&P 500 and let's talk a little bit about what we can expect. And then I'll give you a couple of day trading things to look at. So investors digested the latest U.S. inflation report while also bracing for PPI data. That's coming out today. American Airlines plunged. Jet fuel cost. That's what I was saying. See, expensive energies right now could be a not so good. It could be like putting something in the spoke of a tire while it's trying to move. It's not good. Labor Department said that consumer prices rose 0.6% in August. I don't care about August. I care about annual basis. 3.7, a little worse than expected. They were expecting 3.6, but still, core CPI eased to 4.3, which made everything better because that's what the Fed looks at, and they're going to say, what we're doing is clearly making a difference in the economy. I sounded like Yoda there a little bit, right? Can you imagine Yoda? It'd be so cool if we can get an AI to have Yoda pretend he's Powell and do maybe I can get a sound machine to do that. That would be funny. Meanwhile, there's only a 3% chance that they're going to raise rates next week, but there's a 40% chance that they're going to raise rates in November, and that's a big question mark. I would keep an eye on that number very, very closely. We have Adobe, Copart, and Lenner coming out with earnings. Copart's not huge, but Adobe and Lenner are. PPI, as I mentioned, is coming out today. It's coming out before the market opens. Keep an eye on it in 31 minutes. Core PPI is going to be the big daddy. That's what we're looking at, and we're looking for the number to be, as I mentioned, right here. I'm trying to give you the full lay of the land. 2.3. This is what you want to focus on. If it's 2.2, that'll be really good, but they're expecting 2.3. Let's see what can happen on that. Core retail sales, jobless claims, that's if they start talking about jobless claims, the number has been really good. It's been below the moving average. Europe is kind of flat. They're exercising caution in anticipation of their policy meeting. They're going to decide if they're going to raise rates or not later in the session today. And the word on the street and the sentiment is 0.25 basis points, which is priced into the market. We'll see how that does. China closed higher, which is good for U.S. Investors continue to seek policy measures and sign of economic recovery. According to unnamed senior central bank official, I don't know whether to believe this or not, publication affiliated with People's Bank of China said on Wednesday that Chinese central bank intends to stimulate demand and support moderate price rebound. Japan closed sharply higher, touching its highest level in a week after a series of weak economic readings. Bolstered bets that the Bank of Japan will need to retain negative interest rates for a foreseeable future. I hope it doesn't, because if it does, it's going to be in the same position it's been for the last 29 years. It's been in a recession for 29 years. Seriously. Oracle rose. It got upgraded. We're going to talk about Oracle in just a few minutes. And that's pretty much it here. As far as sectors are concerned, look, if you look at the cumulative, energy and consumer discretionary. If you look at the 6 weeks, energy. If you look at the 3 weeks, energy. If you look at the 1 week, utilities. What the hell's going on here? Let's see here. Utilities, consumer discretionary, and energy. Let's look at utilities. I got to see this. Are utilities finally coming up with energy prices going higher? I wouldn't be betting my money on this. I like this a lot better. See, to me, this looks a lot better than this. A lot. But I do like consumer discretionary too. Although I would wait for consumer discretionary to pop up here, where with XLE we don't have to wait for anything. We're there. So we're going to look at some options. We're going to look at 9/29, that's 15 days from now. And we're going to look at the 173 strike price right here. 173 strike price. And If not, let's go to the monthly. If you want a further expiration, go 36 days out, but don't hold this beyond 10 days. I would go with the 173, and I would sell the 178. Buy the 173, sell the 178 to offset by about 40%, maybe 20-30%. Implied is pretty good. And I like the energy sector right now. It's the only thing that has a very clear directional bias without any monkey business. And you know what I think about monkey business. Keep your eye on Adobe. I'm not sure if they're reporting before or after. Probably, let's see here. But the last report, they're going to report after the close, I'm pretty sure. Pretty sure they're going to report after the close. But it's a big AI play, not as big as Salesforce, but it's a big AI play. Keep an eye on the stock today. Now, Oracle. Let's talk a little bit about day trading, shall we? I still feel Oracle couldn't break through to the downside. We took a little day trading profits as we broke through, but now it's above the 100-day moving average. And it's now got upgraded, and it's heading towards the 50-day moving average. Now, don't get greedy. Please, please, please. It may not happen today, or it may happen today. Oracle can move 10 points in a day like this, here, 120 to 113. Oracle, I want Oracle. I like Oracle. I think Oracle is going to rebound, possibly. But I want to see it above the 50-day moving average. So you want to set an alert on Oracle right around 117.20. And if it gets up there, let's revisit it. Send me an email. We'll revisit it, or we'll talk about it in my VIP room today. That's happening at noon. And remember something, folks. Today is the day. I'm unveiling a brand new weekly cash flow challenge starting at 1 p.m. Eastern time. I'll show everyone how to take advantage of the ongoing market volatility. That's right, ongoing market volatility to draw extra cash income from income-generating spreads. I've taught tens of thousands of people about the market and how to trade over nearly 30 years. It'll be 30 years in January. It's not complicated, and anyone can learn. And my next goal is to turn at least 100 new traders into my next 5-figure success stories. These are high probability, low risk trades that we'll enter on Monday. Each week, hold 3 to 5 days on average, and then we get out. They don't have to expire. We can liquidate them, or they can expire. It's up to us. Click on the link below and join us for my next weekly cash flow challenge. I'll see you at 1 p.m. Eastern time. Now, Telegram channel. You need a link. The link is located. You need to sign up for Telegram and then click a link. It's a private channel. Go to rogerscott.com/Telegram. rogerscott.com/Telegram. Get that link. If you want to get a hold of me, it's easy. Post question underneath the video in the YouTube channel. Subscribe to the Roger-Scott YouTube channel. Send me an email at roger@rogerscott.com. roger@rogerscott.com. Duh. Like this video, subscribe to our channel, and don't forget, live reveal, weekly cash flow at 1 p.m. today. And my VIP room is at noon. Oh, wait a minute. It's Thursday. It's Thursday today. What am I saying? Duh. Thursday, it's 11 a.m. It's not at noon. My VIP room is at 11 a.m. Again, 11 a.m. VIP room, not at noon, and I go live at 1 p.m. I'll see you guys later. Have a great, great day. Bye.